So you're thinking about purchasing a property and you want to know some of the tips and tricks in regards to what you should expect when you're purchasing your new home. Well, in this video, guys, we're going to tell you a lot of wonderful little ins and outs, and sometimes those things that aren't really mentioned when it comes to actually purchasing a property that people actually run into when they're purchasing property. So with that being said, as we always like to say in this channel, let the show begin because we're getting after it right now. Now, if this is your first time to our channel, guys, and you really want to know everything there is to know about moving, purchasing properties here, or even selling properties if you decide to sell later on, we can be of service with that as well. But if you're looking to purchase your first property and you really want to know what does it take for you to purchase a property, not just here in Las Vegas and Henderson or the North Las Vegas area, but just what does it take to purchase a property? Now, this may not apply to every single state and every single country because we have partners and people that we advise in different countries as well, but it doesn't necessarily apply to all of that. We're going to give you that general, and then I want you to go and talk to your real estate agent, your local real estate agent, and make sure you get all of these things specified and clarified with your advisor there as well. So with that, guys, my name is Levert, and I am the team leader of Team Levert here of eXp Realty in Las Vegas and the Henderson area. In this particular video, we're going to talk to you about first-time home buying, what you should expect. Or for those of you that may be buying a property after maybe 5-10 years and you can't remember that process, just use this as a guide, if you will, in regards to what you can expect when it comes to purchasing a new home. Now, one of the biggest things that I run into, and I feel like my clients run into, is really preparing for the purchase of your property. Sometimes people get into their minds, okay, well, we don't want to talk to anyone right now. We don't want anyone pulling our credit. We don't want anyone doing anything, blah, 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 until we're ready to go. And sometimes in that till we're ready to go mode, you may be preparing for things that you don't even realize you don't even have to prepare for. So I'm going to strongly encourage you to make sure that you're talking to a professional in regards to helping you out with your real estate. We can get you connected to lenders. We can get you connected to appraisers, inspectors, all those kind of great things in regards to what it's going to take for you to purchase your property. So do not wait until you feel like you're solidly ready before you start talking to someone like myself. We want to make sure that we do what's called a strategy session with you. I've done strategy sessions where a client has done that with me, and we didn't necessarily buy a house until maybe 5-6 months down the road. We've done strategy sessions, unfortunately, where we've also done a year out. But nonetheless, we want to make sure we help you get an understanding of what it's going to take for you to purchase your property. So don't wait. Give us about 3-4 months before you feel like you're actually ready to buy to speak with us, and then we all can come together and put a plan together for you. Another thing I want you to be concerned with and make sure you're aware of is going to be your costs. You're going to have upfront costs, you're going to have some costs that happen in the middle, and you're going to have some end of session or end of transaction costs. We really want to make sure we're aware of that, depending on what kind of loan. When you do that strategy session, you do that buyer's consultation with us, we'll determine after you've spoken with your lender what type of loan you're going to be doing. I want you to prepare before you buy. You know, like you date before you marry. You know how chefs actually chop up things and they have a sous chef, or they prep things before they pop it all into the pan. So all of those different things are vital in this particular situation. You may, for most people in this situation, be purchasing one of your biggest financial purchases. You do not want to just jump into it right off the bat. You want to make sure you meet with professionals, you meet with a team. We're going to help create a team for you. Myself as your real estate agent, lender of your choice, we can introduce you to some lenders. Yes, that's definitely doable. All of those different people, a title company here on the West Coast, an attorney you may need on the East Coast, all of those different types of things. You want to make sure you meet with those people as much as you can to prepare before you start jumping out there and actually purchasing a property. So prepare before you buy. That means you're going to meet with us and you're going to do what's called a seller's consultation. A buyer's consultation or a strategy session or whatever someone may call it. So make sure you sit down with a professional and they go over things with you to help you prepare. If you're working with an agent that has not done that for you, you may want to be a little bit leery of that. Now, if you come into Las Vegas, there are definitely people who have come into Las Vegas and they say, Levert, we're ready to go. We need to buy something as soon as possible. I'm still going to ask you a little bit of a list of questions. We want to make sure that we're doing the right things for you to make sure we've taken you through the process as much as we possibly can before we get you out there and prepare for those offers to be written. So again, prepare before you buy. You're about to spend 400, in our case, 440,000 on the low end, possibly 2 million on the high end, 3, 4, 5 million on the high end, whatever that may be. Preparation is vital. And when we've done that strategy session, one of the biggest things that we're going to do is take you through the process of sort of A to Z, what it takes you to get through that whole entire process. The first thing we want you to understand that yes, you want to determine, who you want to work with professionally. You want to determine what type of funds you'll need. You want to determine what kind of loans you want to move forward with, so forth and so on. Let's just assume that we're going to move forward for this case of FHA loan, a first-time home buyer's loan. With that first-time home buyer's loan, you can do anywhere as low as, most people think it's 3.5%, and that's it. That's one of the biggest mistakes that some of my buyers come in with, is thinking they only have to save up 3.5%. Now, when it comes to an FHA, you have a 3.5% up front, meaning your down payment, some of that money they're going to do up front. That's your upfront money. And then people don't realize that they also have to spend money when it comes to a time to doing inspections. And then when it comes time to doing closing costs at the end. And those closing costs can come up to anywhere from almost like 1, 2, even 3% of the purchase price of the property. Loan, where you can put 3% down, you can put possibly 20% down, depending on what you'd like to do in regards to what's called property mortgage insurance. Some people don't want that property mortgage insurance, which could cost them hundreds of dollars a month more in regards to them having a mortgage payment. So you want to be aware of that. Your lender will be able to go over those particular types of things more with you, but you want to be aware of these different costs. You can do a VA loan. A VA loan, you can put $0 down, depending on your strategy and your eligibility, depending on what your eligibility is. You can put $0 down in regards to you purchasing a property with a VA. So there's all these different types of options you want to make sure you go over. And again, we'll go over those in your strategy. But again, understanding all your costs. Now, let's say, for instance, FHA. FHA, which is your first-time home buyers. FHA, you can, again, put 3.5% down. That is on your front end. That means the money you bring to the table in the beginning, meaning how much you put down, 3.5%. If we're buying a property at $440,000 and you put 3.5% up front, no, after you put that 3.5% down, whatever that mortgage amount is that you're going to be taking that loan out for, you then will have possibly 1 to 2 to even 3% worth of payments at the end, which is going to be called your closing costs, that you'll also have to come up with. Now, depending on who you choose as your agent, as your team that's going to represent you, we can come in and we can help you negotiate those closing costs, especially in today's market. We've got to be very careful of when this video is being made and what kind of market that we're in. So definitely check in with us to understand what kind of market that we are in. Are we in a market where we can come in and we can ask the seller for concessions and ask them to help assist us in some of our closing costs? Can we ask them for all those different types of things in regards to repairs? Whatever those things are, make sure again you're talking to us before you're ready to purchase, so that way we can help you understand what kind of market that we're in and what kind of costs we can help you sort of kind of not deal with on your own, but maybe have someone else assist you in that regard. So again, depending on the loan, make sure we understand what our upfront costs are, our sort of kind of middle costs are. Some of those middle costs can be things like preparing or buying your inspection. You have to pay for your inspection up front. The appraisal is something that is going to be ordered, but that's going to be ordered with the lender. The lender, they're going to order that, but that's something you pay at towards the end. But again, all those different costs you want to make sure you're aware of. Everyone's situation is going to be very different. We're going to ask you a lot of questions. You may have to deal with getting your rental, getting a pod set in front of your house, paying someone to help move you. All of those different costs you want to make sure you're aware of. It's not just say for 3.5%, then we're ready to go. We want to make sure we're educating you and getting you out there and your best, so you're not sort of kind of blindsided with more of these fees that may be coming up. So again, sit down, talk with us, do that strategy session so you are aware. When we get you into your beautiful home, you want to be aware of all those additional costs as well. Have you purchased a property that's in what's called an HOA, a homeowners association? Does that HOA have a monthly? Does it have a quarterly? Whatever those things are, that additional cost will be a part of your mortgage. Well, will not be a part of your mortgage payment, but that's something in addition to your mortgage payment that you'll be making. So make sure you're aware of all of those different fees. You want to ask all of those great questions. Is this in an association? Do I have a master plan fee? Do I have a sub association fee? all those different costs. You want to understand what your taxes are in regards to when your taxes are due. Do we have whatever the annual amount is? Is there a monthly amount that I have to pay, or is there a quarterly amount that I have to pay? You want to understand all those costs. And when you sit down with myself and other professional agents that want to encourage you to do a buyer's consultation or a strategy session, we will help you understand really what all those sort of kind of not covered, but unaware of costs that most people don't think about when it comes to them purchasing their first home. In addition to cost and money as well, there are going to be times, depending on which lender that you choose, your lender may want you to have what is considered to be reserves, if you will, meaning additional money in the bank. So in addition to the money that you've saved, in addition to the money that you set aside to take care of all these other fees, they may want you to have a certain amount of money in the bank for reserves. So just in case something happens, do you have enough around to be able to float it for 1, 2, 3 months, whatever that may be? This depends on your lender, your bank of choice in that regard. So reserves may be something that you also want to think of. But again, speak to us. We'll be able to sit you down and help you understand whether or not this is something you'll need to have. In regards to the finances of everything, we're definitely going to partner with your lender of choice, and we'll make sure that you understand what he or she may be asking you in regards to what they expect or what they want you to have as far as qualifications with their particular loan programs. And so when we really understand what all your numbers are, you're going to have a real solid understanding that when we go into a contract, we don't want you what we call house poor. We don't want you stepping into a property that, even though you may be pre-approved, not pre-qualified, pre-approved for something at 600 or 700,000, but that monthly mortgage payment is going to be hard for you. But all of a sudden, when you purchase that property, you jump in, and let's say, for instance, if something happens with the water heater and you got to put up a few $1,000s, we don't want your house poor where you can't afford to maintain your property. Because when you purchase a property, you no longer can call someone and ask them to come in and take care of it. You are the homeowner. You're going to be putting that money out. So we want to make sure you know your numbers. We're going to go over your numbers with you, with your lender, myself, again, title person here on the West Coast, attorney on the East Coast. We are going to be your team. We're encouraging you to make sure we are all connected, because we are going to be your team to help you make sure you understand your numbers, and we don't get you into something that all of a sudden you have to sell in a year or two because you can't afford it. We don't want your house poor. Small rule of thumb, you can talk this over with the lenders. I would say anywhere from about 25 to 30% of what you are going to pay on your mortgage is probably the amount that you want to think of in regards to what you bring in monthly. 25 to 30%. So you don't want to be house poor. If you're paying 45%, 50% of your mortgage, of the money that you make a month, we're all going to be adults here. It's going to be up to you. But I would encourage you to make sure, again, you think about being in that sweet spot, 25 to possibly 30% in regards to what you can afford monthly. We don't want your house poor. I will sell houses all day long, but I don't want to have to sell your house for you in 2 years or 1 year because all of a sudden it's something you can't afford. I want you to enjoy this beautiful investment, okay? Let's make sure we're not house poor when we purchase a property. Let's understand this process. Now, when it comes to purchasing your property, some people think of condos, some people think of single-family homes. Some people don't realize that they could actually look at multi-family homes. It's a great thing for you to possibly look at. I keep checking my dog out. She's playing with her bone down there. But nonetheless, you can make sure you can do a multi-family property in that sense, where you speak to your lender again about this, where you can purchase a fourplex or whatever it may be. You purchase that one, or you live in that one unit and you rent out the other properties, or you rent out the other units. I would encourage you not to tell the other people, of course, that you're the owner of the unit or of the multifamily. And then that way you can have them using that income that you get from those rentals towards that monthly mortgage. So that's a possibility that some folks are doing. Depends on what your situation is, if it's something that you want to do. So again, condos, single family, townhome, multi-family properties, understand what your options are in regards to what you can purchase when you first go out as far as your purchase is concerned. Another thing I want you to be aware of is when we get out there and we start looking at these properties, I want you to be aware of the neighborhoods. We as agents, we can't do what's called steering. We're not going to necessarily take you to one area because we think you should be in this area, or we think you you would be great in this area. We should be asking you a lot of questions. We're going to be asking you a lot of questions. We want your feedback. We're not asking you a lot of questions because we're trying to be nosy, but we've got to be beyond nosy in order for us to help you get into the right area that you're going to be very happy with, that you and your family are going to be happy with. So we need to ask you a lot of questions. We need your input. Based upon your input that we give you, then we're going to help advise you in regards to based upon the information you've given us to be in the area that you really want to be in. I'm going to stop this because my dog is playing with one of her squeezy toys. Okay, and we're back. So with that, again, like I was saying, make sure that we're understanding what type of property we're going to be purchasing. Condo, townhome, single family home, multifamily, all those options are there. And we'd love to be able to explain to you each of them. And you definitely want to make sure you understand which one you're doing when you talk to your lender, because your lender is going to have certain and separate qualifications for each of those different scenarios. So that way you can go over all those options. Now, the biggest thing is here, like I was saying in the beginning, let's talk. Let's set up a strategy session. Let's not run out, jump in and do it. Let's prepare before we're ready. So we'd love to hear from you guys. We hope that this video has been of value to you. If it has, please make sure you share it with other people, send it out to other people. Use this as somewhat as your guide or something that you can go back to, get some reminders, all those kind of great things when it comes to you actually purchasing your property. I know you got your squeezy toy. When it comes to your property, I know you got your squeezy toy. When it comes to you, and we're back again really quickly. So again, make sure you're checking into all of those different types of things with your lender, what kind of property you're going to be purchasing, setting up that strategy session with us so we make sure that we get you prepared before you're ready. So if you have 2 or 3 months, you should be talking with us. You should be talking with your team in regards to how you're going to get out there and take advantage of this wonderful market and get you into a beautiful property. Again, share this video. We'd love to make sure we can be of service to many people. We look forward to seeing you guys in our next video. Leave comments, leave questions. We'd love to make sure that we're getting this, getting you guys all your questions and concerns answered as much as we can. See you in the next video. Take care.